All right, let's talk about my trade today, though. My trade today was RHE, which was the #1 top gainer of the day. Today, got back to where I wanted to be, and that is on the green side of the small account challenge. Here's my P&L from, again, just so you guys never think it's a paper trading account. There's my account number up top. It is obviously a little blocked because I don't want people knowing exactly my whole entire account number. But this is real money. This is what I'm trading right here. You guys can see right here where I got in on it, how many shares, if I limit ordered, market ordered, everything right here. And I just want to be 100% transparent at all times. So I made a total of $188.66. That's kind of where my gains have been, right? My last gain was $198, $196. This gain is $188. So I'm making about $200 profit. That's kind of right around my average right now. I think my first trade as well was right around a $200 profit. So, that's kind of where I'm ending up at this moment with about $200 profits on my trades that I've taken so far in my small account challenge. My one loss that I had was a $400 loss. So that's why I had to battle back. And that was just stupidity on my part by letting that go too far. But with that being said, I have worked my way back. I'm back on the green side of my small account challenge. And that's what it's all about. Staying consistent, not getting, caught up in emotions, not feeling like you have to hit a home run to get back going to where you want to be. It's more about, making money consistently in the market, locking in those tiny gains and looking back maybe a few weeks to a few months from now and be like, wow, look how much I improved, right? Especially if you guys are a part-time trader, especially if you guys don't do this all the time, it's not about hitting a home run on every single trade. It's about, again, locking in those gains. And what I always like to say, imagine I lock in $200, $200. And let's say, a lot of times I'll be going like this. I'll go, hey, $200 times 5. You do this every single day. And then, that's $1,000. Times that by 4 weeks in the month, times that by 12. That's $48,000, right? But now some of you guys may say, well, Deck, you don't have settled funds right away. So you can only do that 3 times a week. All right, so let's do, $200 times 3, right? And let's times that by 4 for 4 weeks in the month, because this means we're letting a day settle for our funds. And now let's times that by 12. Guess what? That comes out to $28,800. So imagine if you guys are on a small account. Imagine you guys are only doing this as a part-time job. You guys are doing this as fun, and you guys are, having your funds have to be settled. You can still make, just by locking in small gains, such as $200, nearly 30,000 extra dollars a year. How insane is that? And that's not, sugarcoating it at all. That's, showing you guys that you guys are having days off that you guys are not going to be trading, right? It's settled funds with a small account, not even a giant gain of $200. How nice would that be? Imagine at the end of the year you have your regular job going, and you look back in your account, you say, "Oh, I have an extra $30,000. Pay off your bills, pay off your debt, pay off your mortgage, go on a trip, travel around a little bit." An extra $30,000 goes a long way, right? So I think, that's absolutely awesome. I think that's so cool. So, and a lot of people do this full time in here. Ben, you guys already, again, you guys are killing it, making 400, 500, $600 a day. Enjoy it. But this is my P&L on RHE, $188, made 330, got in at 334, 333, and 332, right? So I got in right here on a limit order. Why did I limit order? Whenever I am looking for a bounce play, guys, whenever I am looking for a bounce play, I am always looking on a limit order. Why would I look on a limit order? Well, because in this case, guys, what do we have here? If we have a stock that is falling, right? We have a stock that is falling. What do I know about limit orders? Limit orders, you pick the bid price. You pick where you want to get in. So for this case, let's say I want to get in right here. Okay, so I want to get in right there. And now the stock is, let's say, continuing to fall, continuing to fall, continuing to fall. And right when it hits here, guess what? That's where I should get in. If I market order in, though, I'm not getting in at the limit price. I could be getting in at the ask price, which is going to maybe be up here. So I'm no longer getting in at the limit. I'm getting at the ask price if I market order in, and that's a higher price, right? So with that being said, what could happen? The stock, is all the way down here now. Maybe pops up there for a second. That's where you got filled, and now it starts coming back on down even more. You cut your stop loss maybe right here and get out, and maybe it, just takes a little bit more to come back on up, right? So I don't ever limit order, usually on bounce play. I'm not going to say ever, but you never want to market order in on a bounce play. You always want to limit order on a bounce play because you want to get in at the lowest price possible, right? You guys want to get in at the lowest price possible, and that would be on the bid, not the ask. So whenever you guys are looking for these bounce plays, find the area of support, put a bid at the area of support, and that's where you guys can go ahead and be all set, ready for your trade to get filled on, right? So where was I in? If we're looking at this play, we're gonna make this a little bit bigger right here, and we can go over this whole entire play. I got filled on this drop, right? I got in at 330, 333, 334, that whole area, right? So 334, 333, 332, that whole area right there. I got out at 347 and 350. Now, with that being said, let's go over the 330, 334 mark. Why did I get in at these areas? Well, the first things first is RHE. This thing was an absolute beast, right? If we look back in pre-market right here, we could see that this stock went on a ginormous climb. It went from 170, spiked all the way up towards around $4. This came out with a press release this morning. It is so important that you guys are here in chat in pre-market, because sometimes you guys aren't going to be able to see news, right? What do I always show as well? I always show the filings, and that's what came out on RHE. A filing came out on RHE on an 8K, right? So what we have here on an 8K, it's talking about entered into a purchase and sale agreement. This purchase and a sale agreement. So again, we have the word agreement, which is a great key word that we always like to study, the word agreement. What else do we see? We see this massive amount of money of $28.5 billion in cash. That gets traders going. Any large sum of money, right? On top of that, if we look at RHE, we can look on RHE right here on Yahoo Finance. We can look at on that play on trade ideas. And RHE, the float right here is at what? How much? 1.4 million. So we have a float of 1.4 million, which is a rather low float. So we have RHE on good news. We have RHE on a low float. RHE also, again, very low on the RSI, bottom right-hand corner. And that's where this thing just really started taking on off. That's where this thing really started getting some volume. And I was awake. And I know we already talked about this. A lot of you guys were awake for this already. And I saw this at 160. And I saw this at 170. And I was very, very close to pulling the trigger. And guess what? The stock just ripped and run. But you know what I'm very happy about? Even though you could look at it as a disappointing side, say, oh, you didn't get in on the big area. I don't care. Profit's profit. And I got in on the only bounce play of the day. The only bounce play, the only green candle right here is what I nailed. Now, why did I get in on that bounce play? Why didn't I buy? Right? Well, RHE did go on a great climb, and a great climb from 295 all the way up towards around 395. Now, with that being said, you could be a person that sits there and said, why didn't you buy on the dollar spike? Why didn't you buy in pre-market? Well, it's a lot easier said after the stock already rips, right? Anyone can look at the stock, see a $3-4 spike and say to yourself, oh, why didn't you buy there? Well, we don't know at the time that it's going to spike $3. We don't know if it's only going to run 10 more cents and it's going to fall, or if the stock's going to run $10 and then fall. If I know exactly how high it's going to run, it's a lot easier to obviously make money, right? But the thing was, I wasn't in on the first, dollar spike right here. And the last thing I want to do is be chasing a stock that's currently up 260%. So I'm not going to chase a stock that is, up higher than, 150% usually without any sort of pullback. RHE went straight up. RHE went straight up at the start of the day. And while this is very profitable from 290 all the way up to 295, who says, it was already up 160%? Who says it couldn't turn around at $3 and dump? Who says it couldn't turn around at 325, 350, 375, $4 and dump? So I said, hey, let me wait for that, spike to happen, and then let me look for the bounce play. Now in RHE, this stock went from $4, came all the way back on down, and it came back down towards my bounce play. Now, when we were looking at this bounce play, guys, we had the VWAP right around that 330 mark, which is a great area to always look for bounce plays. On top of that, guys, RHE, it is, giving a back about 70 cents. This stock just went on a massive move, and it just went from 295 all the way up to $4. It is very rare to see a stock go from, let's say, 295 to $4 back down to 295 just like it, without any sort of bounce play. The majority of stocks, if you go on a big time rip, guess what? You're going to see the stock come back down a good amount and then, usually bounce back up. It could still crash all the way back on down, but you still always get what? You still always get, a couple bounce plays here and there before a crash. On top of that, what usually happens is, again, a stock may, go on a big time spike, come back on down a little bit, and then maybe even spike even higher. right? Where we see that happen all the time, and then maybe it falls later. But what I was looking for is I knew that bounce was going to be coming. So I got in at the low areas right here, right around that 330 mark. I got in. Well, let's look at exactly what time. At 9:41. I got in at 9:41. I got out at 9:45 and 9:46. So at 9:41, I'm in at. And with that being said, that is this candle right here. And went right down towards around 331. I'm saying perfect, right? Next candle at 9:42, it's sitting right around 338, hit up a high up towards around 345, right? And I'm like, all right, nice. This is great, great area. Then it actually crashed. Came all the way back down to 325. I said, hey, if it hits 321, I'm out. If it hits 321, I'm out of here, right? I can't take a loss. I can't take, or if I take a loss, it can't be big. So I'm in, I'll give it about a dollar, or not a dollar. I'll give it about 10 cents or so. I'm in on 1,100 shares. The most I'll ever take on this type of play, this loss would be like $130 max. But, we had 225 hold on up very nicely. The stock started making a nice little U shape, came back on up, broke through 330, broke through 340, broke up through 350, ran all the way up to highs up towards around 365. Now, again, that was a perfect bounce play, perfect opportunity. And with that being said, the smartest thing I think I did was I got out on 500 shares at 347. And why did I get out of 500 shares at 347? I got out there because I wanted to lock something in, right? As the stock climbs, I like scaling out of my position. Now, what does that mean when I'm scaling out of my position, guys? When I'm scaling out of my position, the number one thing that the point of scaling out of my position is to conserve money, to guarantee I'm locking in my profits, right? So with that being said, if I buy a stock, let's say, RHE starts moving on up, right? RHE starts moving on up. And let's say, just for the example, I have 1,000 shares, right? I could lock in, let's say 500 shares right here. So I lock in 500 shares right there. I lock in some money. As the stock climbs on up, what do? I move my stop loss up to either at this $500 mark or even above this 500 share mark, because what? I do not want it going below and me losing now this 500 shares, right? I don't want that ever happening. So as the stock climbs, I lock in profit, and also I move my stop loss up to make sure I guarantee that profit, right? So, I locked in 500 shares on RHE at the price of 347, right? So that was at the 347 mark. Now I'm not letting it go below 347, right? And let me just make sure. Yep, 347. And now again, you can see I locked in the rest at 352. So again, the stock started moving up higher and higher. As the stock moving up higher and higher, what do I say to myself? All right, hey guys, now it's up towards around 355. Now it's up towards around 360. Hey, if it goes below 355, I'm getting out of it. It cracked 355. I locked in my last 600 shares right here, and that's where again I was able to come out. So I locked in my 600 shares right here, and that's where I made again my total of $188. As the stock climbs, you lock in your profit. You can lock in a little bit here, lock in a little bit there, lock in a little bit there, but you also move your stop loss up to right where you locked it in. So as the stock climbs, it comes back down. You can't lose your 500 share profit that you just made. It's impossible. You can only make money after you lock in, right? You can only make money. You can't lose any after again the stock starts falling. So, that's the most beautiful thing about that strategy, about scaling. The con about it is, yes, you would definitely make more money if you never lock anything in, and of course, lock it in all at the top, right? So you lock it in all at the top. Guess what? You're going to be making more money. But this just kind of gives you insurance, right? It gives you insurance that hey, you may not make as much as you possibly can, but you're guaranteed to make something. And that's in stock trading. That's good for me, right? So in stock trading, that's exactly what I want. So a little lesson on scaling right there is, scaling is basically, insurance. As the stock climbs, you lock in 20%, lock in 50%, lock in 75%, move your stop loss up to where you entered at. And that means you cannot lose any of the profit you just made. You may get cut out, and yes, you'll be able to lock in the rest of your shares at the stock you just sold at. You're still making profit from your entry, but as the stock climbs, you lock in more and more and more, and it just gives you insurance that you cannot lose any sort of profit. So that's what I like about it the most. So very happy with my trade today. On top of that, guys, this is probably maybe one of the fullest profits chats we've seen, so far in the small account challenge. We probably have roughly, 100 traders, locking in RHE profits today. So, it's absolutely great. Put a screenshot again. A lot of times I take a screenshot and just send it over on Twitter or something, just because I love showing you guys off. But 100, 270, 155, 220, 82, 73, 273, 110, 130, 210, 210 as well. So again, great job for everyone, just making in some awesome profit, making some awesome bank, and again, kicking off our week on such a strong note. Right? We just came back from Easter. This is our 3-day break, and this is the way we kick it off. Traders are excited to be back in the market. Time to make money. I'm fired up. I'm excited for the rest of the week. I'm ready for my funds to be settled and to get back to it. With that being said, I'm ready to start seeing some big gains in my small account challenge. No more sitting around. No more, again, letting trades pass you by. No more being hesitant. Time to have confidence. Time to pull the trigger. Time for everyone to continue to keep making money. Right? That's what it's all about here. So again, let's keep it up, guys. Keep up the awesome work. Keep up the awesome momentum. RHE, we're going to be keeping our eyes peeled on this play for that possible rip back up towards around the VWAP area. Break of $3. Watch your volume. Break of the VWAP area. Watch for, again, possible breakout volume to move on in. So that could be absolutely awesome. That could be coming up in about the next 15 to 20 minutes, right around 11 o'clock. Let's keep that on watch. Awesome job today, team. A way to kick off this Money Monday.